Investors are panicked and concerned due to the recent stock market volatility and the coronavirus outbreak. More than 17% of the S&P 500 index has fallen in the last 2 years. When compared to what we and our ancestors have witnessed in the past, this is nothing. Here, we take a look at the most devastating financial crises in the world. Argentine economic crisis, 1999. The 1980s Latin American debt crisis had a significant negative impact on the Argentine economy, as it did on other Latin American countries. It was losing its foreign currency reserves. The Argentine economy was on the verge of collapse due to the Falklands crisis, military dictatorship, widespread corruption, and extremely high inflation. The steep devaluation of the Brazilian currency in 1999 hurt Argentine exports. The Argentine economy quickly fell into a 3-year-long recession. The government froze everyone's bank accounts after the dramatic bank run. Protests turned violent across the nation. The economy has been in a recession for 2 consecutive governments. Russian financial crisis, 1998. Russia issued GKOs, inflation-free treasury bills, 5 years before the financial crisis to cover its budget deficit. Due to their high interest rates, the GKOs attracted a sizable number of foreign investors. GKO sales revenue was being used by the government to pay off interest on outstanding debts. But because of political unrest, economic stagnation, and corruption, the Russian economy has persisted in its difficulties. Investors eventually lost faith in the Russian economy and began selling large quantities of rubles and other Russian securities. More than 60% of the markets collapsed. Within weeks, many banks had disappeared. Despite using its foreign exchange reserves, the Russian central bank was unable to stabilize the ruble. Even an IMF loan failed to help. The crisis was over when oil prices began to rise in 1999, and Russia came out of it. The 1987 crisis. Black Monday, or October 19, 1987, saw a 22.6% decline in US stock prices. The Black Monday destroyed hundreds of billions of dollars from the stock markets, but no one is entirely sure what caused it. By the end of October 1987, Australian stocks had decreased by 42%, Hong Kong stocks had decreased by 46%, and UK stocks had decreased by 26.4%. Some people think the growing importance of computers on Wall Street contributed to the Black Monday crash. Inflation and monetary policy were blamed by others. Many of the largest American savings and loan companies, including American Savings and Loan, Gibraltar Savings and Loan, and McCorp, went out of business after the 1987 financial crisis. German hyperinflation, 1918 to 1924. Although the German hyperinflation was one of the most devastating financial crises in history, it was not as bad as the hyperinflation in Zimbabwe. The victors of the First World War accused Germany of starting the conflict. They demanded compensation for the harm caused by the war. Whatever resources Germany possessed, land, gold, and other precious metals, were insufficient to pay for the war. The rate of inflation was high. Many nations charged Germany with deliberately sabotaging its economy in an effort to avoid the financial fallout from war. By introducing a new currency called the Rentenmark in 1923, the nation attempted to control hyperinflation. Asian financial crisis, 1997. The Asian tigers, Thailand, South Korea, Hong Kong, Malaysia, Singapore, and Indonesia, had emerged as the most popular investment locations by the early 1990s. Billions of dollars were being invested in the area by developed nations. Prices for assets skyrocketed. In the export market, China started to pose a serious threat to the Asian tigers in 1996. These economies are harmed by the high debt levels and declining exports. Investors from developed nations withdrew credit in a panic. As asset prices began to decline, there were numerous debt defaults. Thailand was the epicenter of the crisis, which quickly spread to other nations. Regional currencies' sharp decline against the dollar increased the cost of borrowing in dollars. To assist Asian nations in getting their economies back on track, the International Monetary Fund launched a sizable bailout program. OPEC oil crisis, 1973. During the Fourth Arab-Israeli War, the United States supplied Israel with weapons and supplies. In retaliation, the members of OPEC halted oil exports to the US and its allies. As a result, oil prices in developed nations sharply increased. Within 6 weeks, the NYSE lost $97 billion in value. To compete with the gas-guzzling American vehicles, Japanese automakers began offering smaller, more fuel-efficient vehicles. 5 months were all that the oil embargo lasted. But the Arab countries understood the importance of oil to the world economy. The US government established the Department of Energy in 1977 in order to develop a strategic petroleum reserve. So that's the end of the video. Make sure to like the video, subscribe to our YouTube channel, and press the notification bell so you never miss out on our next videos. Until the next video, take care.